Welcome, ladies and gentlemen, to our special presentation titled Testing Your Ideas. My name is Todd Schaefer. I'm the Manager of Research for VectorVest. As you may know, we at VectorVest advocate trading with a plan that is built on three pillars: when to buy, what to buy, and when to sell. This trading plan helps us trade mechanically instead of emotionally, where we make most of our mistakes. But how do you know if your trading plan has any merit? How can you build confidence that it's going to work? And since nobody's portfolio just goes up every day, how can you identify when your trading plan has stopped working or needs some modification? Well, VectorVest has all the tools you need. In this presentation, I'm going to demonstrate for you how you can use these tools to develop an approach that you can trade with confidence. Let's begin by looking at our tools. VectorVest offers 4 ways to test our ideas, and if we think of them as getting more and more refined, we start with a quick test, our quick folio tool, back testing. All 3 of these now are using historical data. The automated portfolio genius, which then brings our trading plan into real time, letting us paper trade or live trade that trading plan. And finally, templates, our newest creation, make it very easy for us to then copy trading plans that we've presented in the past. So these are the tools that we'll use to test our ideas, but just as important as the tools themselves is the process that we employ with those tools. So let's move into the program, and I'll set up our scenario. From the home page, let's go into a market timing graph. For my demonstration, I've set up the market timing graph to have the hard right edge on the recent confirmed down call we had on July 17th. We're graphing about 3 months of time, and I've put the confirmed calls on to identify that date. Of course, I wanted this demonstration to be timely for the current market condition, but of course this process would be the same no matter what timing signal I was using. The question we need to answer is, here I am sitting at a confirmed down call. I'd like to trade with the market trend and deploy a bearish trading plan. But the question I need to know is, which searches are working best? Or if I've developed my own search, is it currently working in this market condition? And of course, once I've identified the searches that are working, how best to manage them moving forward? To begin to answer the question, I need to determine what time frame I want to study to identify the best performing searches. For example, I could just test the period from yesterday to today. Would you be confident that you had found the best performing search? Perhaps if you went to the previous pivot point to current, would that make you more confident? Perhaps if you came from the previous high to current, would that give you more confidence? Perhaps instead of testing just one day, you tested several days in a row. We call that the sliding start analysis. Of course, from a statistical point of view, the more samples you have in your data set, the more reliable would be your result. Of course, it's building that data set that's the challenge if you don't own the simulator or the Derby tools. And let me demonstrate what I mean by doing our test starting with our previous high on the 3rd of July. Let's go into the Unisearch tool, and the first thing we'll do is change our date back to July 3rd, that previous high. And remember, we're doing this, we're pretending on the evening of the 17th, the night we got that confirmed down signal. We're going to use the first of the tools in our toolbox, the quick test, to complete a process we call benchmarking. Quick tests run a search from a start date to an end date and tell us the amount of change in price over that time frame. So it tells us the change in price from point A to point B, but it doesn't tell us what happened in between. And so in this benchmarking process, we're just looking for which searches found stocks that made the greatest gains over this time frame. And we'll begin with the searches short group, which I've highlighted here. If I click on it, we can see that there are quite a few searches within this group. In fact, 28. So in an effort to find the best performing search, I'll click on the search, which populates our search parameters. I'll click Run Search. These are the stocks that the search found on July 3rd. I'll click Quick Test All because I'm displaying 10 stocks. And I'll change our end date to the date that we were pretending we're on, the evening of the 17th. And we'll run the test. Once I've set up that date on the first run, it will be remembered for the rest of our runs. But here we can see ballistic new highs is setting quite a pace. Remember, we're shorting these stocks so that the prices dropped. This would actually be a gain for us because we're short of 15.44%, while the market was down just under 3%. So that's our benchmark because that was our first search. We'll hold that off to the side. Now we'll go to our second search, Crash Landers. If I double click on it, it will open and run the search. And I'll quick test its findings. Here we see that it had 2 losers, 8 winners, making 10.68%, underperforming ballistic new highs short, so we'll just close it. We're looking for the best performer, Doug's Downers. Quick test. Now it only found 5 stocks, 1 loser, 4 winners, 14% underperforming again. And so we continue this process through all of these short searches. And as you can tell, it might take a little time to run all 28 searches. And of course, even more time if you wanted to run those searches over multiple days. So as a shortcut, I might just take the top performing 3, 4, 5 searches and run them over multiple days. But ultimately the question is, how many of these tests do you feel you need to do so that you can be confident that you've found the best performing search, both in terms of overall gain and consistency of finding winners? In the interest of saving time, let me show you the top 3 performers that I found running this benchmarking test. Ballistic new highs held on to make the cut, but we also found No Mojo. It had a gain of 19.9% with 10 winners. And if we scroll down near the end, Burns Vultures, a 20% return, 10 winners. So these are the best performing short searches that we found based on their movement in price from point A to point B. The next level of refinement would be to look at the performance between points A and B to see which ones performed most consistently. To do that, we're going to use our Quick Folio tool. So closing all of our quick tests, here we've run Vern's Vultures on that date, so we're going to come to our toolbar and Quick Folio the top 10. We'll change our name to Vern's and tell it that we're going short. And I click OK, and just that easily I've created a portfolio with Vern's Vultures stocks from the 3rd of July. We'll open that later because we want to open our other contestants, No Mojo. We'll quick folio it. And finally at the top of the list, Ballistic New Highs Short. And now we'll click Open Portfolio to take us to the Portfolios tab. In the Portfolio Manager now we have each of our portfolios loaded from the 3rd of July, run to current. Of course, we would have been looking at these on the evening of the 17th. And what we're looking for, I've identified the 17th on the graph. What we're looking for is that nice smooth bottom left to upper right movement that we always look for in any kind of a graph. The less volatility, the better. So Ballistic New Highs has a very nice looking graph pattern up to that point. As does No Mojo, although we can see the rate of acceleration quite a bit faster for No Mojo. And Vern's, of course, which was our top performer, again, looks even better. What I'm looking for here is, as a disqualifier, one that maybe pulled back severely in the middle of the run before it finally made a higher high. I want to favor those graph patterns that are consistently trending upward. And so Vern's Vultures certainly passes that test, and so I'll move forward then with Vern's. Because the next question I need to answer is, what money management criteria will best manage these stocks moving forward? As an alternative to this benchmarking process, to make the list of candidates a little more manageable, you might start with the VectorVest views, where every night, if we go back to that confirmed down call, every night we tell you the best performing 1 and 5 day searches within the database. This is a product of our Derby tool. And while our test bed was some 10 days off of the high, these are the best performers over the last 5 days, and so we might have looked at some of these searches as part of our test methodology. Here are the quick folios of those searches, and look how well you would have done had you simply read the VectorVest views and looked at those best performing searches. Remember, our goal is to find the searches that are making the best consistent gains in the current market period. Once we've identified that search or searches, it's time to move forward now to try to put a trading plan together that includes money management. That tool is the backtester, but before we go there, let's take a look at that market timing graph one more time. If I use this same time period to determine what money management rules to incorporate in my trading plan, I may not have enough data or enough variability in the data to have a good sense for how it will trade over time. The solution to this problem is you can go back in time to find other similar periods that were more extensive. And of course, the further back in time you go, the more turns you'll have, the more data you'll have, and so therefore the more quote-unquote robust the result will be. How far do you need to go back? Well, you need to go back far enough that you feel confident in the results that you've produced. For our demonstration on the process and how to use the tools, we'll just go back to this previous down call, which we began on March 26th. Now let's open our backtester tool, and we'll click on Backtest an Idea. The backtester is a big what-if machine. It allows us to run our trading plan over an historical time plan, allowing us to deploy and test a full array of settings within the trading plan. For this demonstration, we have included our auto timer feature, which is an additional item for end of day or intraday subscribers. If you don't have the auto timer, you can accomplish these results. You just have to run from point to point, changing portfolio management at each timing signal. If you'd like to try out the auto timer, we do have a link in the views so you can get a free trial. So let's begin our example by changing the name from Backtest 1 to Vern's Vultures. Your program will have these default settings for your account. Of course, you can change the defaults if you go into the Tools section and change the default settings, or you can go on a per case basis and adjust them to reflect your real account status. But we do suggest that you make this as close to your real account value to get more realistic results. In the trading section, in the trading system section of our wizard, we could select an existing trading system, which we'll demonstrate here in a little bit, but we're going to build a custom trading system all our own. And this brings us into the trading system wizard. Because we have the auto timer function, we can incorporate market timing signals into our test. So here are all the VectorVest timing signals, and the portfolio will automatically know when those signal dates occurred and change the trading rules based on those situations and that timing signal. In this case, we're only testing the bearish side of the confirmed calls, so when the confirmed up call comes, we'll just go to cash. For the confirmed down call, we're going to use Vern's Vultures, which was in the searches short group, and scroll all the way to the bottom. Now, this process of optimizing our trading plan or optimization would typically be done for both the short side and the long side. And then, of course, put the two together to come up with a trading plan to play on both sides of the market trend. Of course, in bull markets, you may not want to short the market at all, and you'd have a trading plan that would only play the bullish signals. But here we are in a bearish market trend using our example. So the next thing we need to do is come across to the next tab and choose our stop criteria. Here you can see the VectorVest tool offers a whole array of possible stop criteria. Of course, you would only need to test the stop criteria that you would trade within the range of values that would trade. So, if you chose a percentage gain loss stop, but would be uncomfortable watching any position lose 30%, well then you need not bother testing that combination because you would never trade it in real life to begin with. But we do want to trade a range of stop criteria to see which ones would optimize the performance of this search over the market period. And so I might begin this process because we are shorting. I might start with a recommendation is not sell. And then in succession, I'll run the stop combinations that I would be willing to trade. For some of the stop combinations, for instance, percentage gain and loss, I might run several combinations. Everything from, say, a 50% gain and 20% loss all the way down to a 10% gain and a 5% loss. I might test trailing stops, everything from a 20% trailing stop to a 5% trailing stop. The one bit of advice I would offer is avoid this thing we call over-optimization. If you find that a trailing 14.2% stop loss outperforms the 15% stop loss, it's probably because you eliminated one trade from the sample. And since history doesn't repeat itself, it merely rhymes, that might be an example of over-optimization. To complete my first pass, however, we'll go with the recommendation is not a sell. And in the More Settings tab, we have a whole array of money management criteria. And generally, we start broadly narrowing or refining our settings as we make additional passes. So in this case, I'll leave all of our defaults with 10 positions automatically replacing, not limiting the number of positions we open in a day, closing on the change in signals. We're going to invest the average of our portfolio value into each position. We're going to trade odd lots, not repurchase anything we currently own. And I will make these two requirements. Minimum stocks per industry, we'll do 3. And I want to change the maximum percentage of a stock's average volume to 2. I like those settings in my base runs because I want to enforce industry diversification. And I want to keep my trading positions realistically sized. That's my personal preference, which is a little more conservative. You can, of course, drive your own personal settings. We've indicated at the top that we're going to sell short these positions. We come to the bottom and click Finish. We're back to the backtester template now. All I need to do is change my test period to reflect our start date was the last confirmed down call, and we're going to test it through current. And I click Finish and Run. Here you see the portfolio automatically trading positions in concert with our timing system and our stop criteria as set. And while I didn't get a favorable result on this run, not to worry. Let's just strike a copy. Come back to our customized trading plan. Click on the automation rules for confirm down, and we'll change our stop criteria now to our percentage gain loss. And let's do a 50% gain and a 20% loss. I'll click Finish. We'll change our name. Let's make this 50/20. And we'll click Finish and Run. And so begins this process of optimizing, where we're changing one variable at a time, always pursuing an improved result. And so next I'll build a series of tests, changing or looking for the best stop combination. Once I found the best stop combination, then I'll go to those additional settings and start changing some of those to see if I do better with a smaller portfolio or a larger portfolio in terms of number of positions. Should I replace? Should I not replace? Step in versus jump in. All of those additional settings that we find, if we go into the trading plan, all those settings that we saw in the More Settings tab, I can change them systematically, again, always trying to find improved performance. Let me show you the results of my testing. Here are our results sorted by percentage gain descending, and we see that the best stop was a trailing stop of 20% when I combined it with a maximum gain target of 30%. In other words, in the time frame of this study, I was better off taking the gain as soon as I got to 30% than trying to hold out for something in excess of 50 before it pulled back to its trailing 20% stop loss. And so by moving through this process, you not only optimize performance, but you also learn a little bit about how that search performs in the studied time frame. If we look at the performance numbers for our best performing search, we had 48.78% winners. We had a commission of $716. If we annualize that return, it would average 34.96%. At our maximum drawdown, our biggest pullback from gain in the equity curve of the portfolio, 8.85%. If we look at the equity curve of the portfolio itself, again, we're looking for that lower left to upper right movement. The smoother the better. I like that on each turn we finished higher than we started. And while an 8.8% drawdown is pretty good, I might look into this time frame to see if there's some things I might do to help eliminate some of that pullback, perhaps stepping in or not replacing. And of course, had we implemented this trading plan on that confirmed down call, currently we'd be up some 4% or so. Now the backtester also generates a series of reports. If we come up to our reports button on the upper toolbar, one of particular interest would be the summary report. This report benchmarks the performance of your backtest, and that therefore sets my expectations for the quote-unquote normal performance of this trading plan. And so how do I know when to re-examine my trading plan? Is when my performance falls outside of my tested parameters. And to refine this even further or get even more robust data, I can move forward now easily and convert this into a real-time portfolio to either paper trade moving forward or to actually live trade with real money. Now, of course, in real life, I would probably have a full trading plan that has both bull and bear together, but to convert this trading plan into a portfolio, I simply click on the convert button. I'm then offered two choices: to either start with an empty portfolio, in other words, start over, which would initiate the trading plan today, or continue from the end of the back test, which would simply continue the established back test through the current time frame, applying our trading rules. At the bottom we have the Genius settings for automation. If we start the portfolio with the Genius on, it will automatically start that trading plan. If you wanted to wait for the next signal, for instance, you might start with the Genius off so that it would take no action. It then asks you how often you want the Genius to check for your stop criteria, and that would be either throughout the day or just at the market close. We'll continue throughout the day, and I'll click OK. So just that easily now I've transferred my back test with all of its settings into the portfolio manager. Here we have the Vern's Vultures portfolio. If we minimize the toolbar, we see the Genius is on, and currently our confirmed call is down, and so we have that timing signal, and we see that it last applied the stop criteria of our trailing 20% stop with a 30% target gain. This is now running that trading plan in real time, and any activity indicated will be in that box, so you can see any trading activity indicated by the portfolio trade in real time. And of course, with the portfolio manager now, you have all the functionality you would need for any portfolio to be able to edit transactions to perhaps your accurate filled price, to add individual trades manually, as well as deposit or withdraw funds, add dividend income or option premiums. And of course, with our reports, using that summary report, you can now compare your real life experience to your tested portfolio. And of course, all of these tools coming together to help you develop and deploy a trading plan that you can have confidence in. And finally, as an enhancement to this system, our most recent development is the use of templates. Templates of trading plans that we've developed that have been working in the past. To see those templates, let's move back to the backtester. These trading templates can be used to create either a new backtest or portfolio. I've come to the backtester because I'm imagining you might want to look at the previous performance or historical performance of these templates in a process similar to the one I just demonstrated so that you could be confident in the performance of that template. So to build a backtest from a template, I click on Backtest an Idea, or if you already have open Backtest, just click New. And we're going to select an existing trading system in the Backtester wizard. So clicking on that, I'm presented now with a list of these templates, and you can see that they're grouped. So here are templates for all of the Surefire Success portfolios that we're currently tracking in the portfolios. We have the winners from our 30-day dash challenge. That was a subscriber contest that we ran several months ago. And then we've started several groupings here, whether they're capital appreciation and income-based, or just income-based searches. These are our newest additions to the templates. And here you see Star Search was a very well-received strategy of the week that we did a couple weeks ago. If I click on that and click OK, it imports it back into the Backtester tool. I'll give it a name, Star Search. Here are the rules for the trading plan. And finally, let's set our test period back to the beginning of 2013. In a second. And click Finish and Run. And just that easily, I was able to replicate the trading plan as we demonstrated in our Strategy of the Week presentation. And through the magic of time-lapse photography, I'll build backtests of the other templates. And here, just that easily, I've created 3 different trading plans, 3 different timing signals. I can look at their performance over the past year and compare. I can modify the trading plan and try some of my own nuances or change my own settings. And once I like it in the backtest mode, it's as simple as clicking the Convert key and convert it into a real-time portfolio. Of course, I can also create those portfolios from the Portfolio Manager. Simply click on New, give the portfolio a name, turn on the Genius, and select an existing trading plan. Here's a portfolio that Dr. DeLito created, copying the S&P 500 Vern's Vultures portfolio that he created back here on the 22nd, and is tracking that portfolio in real time. And again, you have all the power of the backtester and the portfolio manager to personalize their settings and to analyze their performance. Of course, we also offer templates for our Canadian subscribers. Simply select an existing trading system, and here we offer 6 specific templates for the Canadian market. Of course, we also offer templates specific to the Australian market. If we select an existing trading system, We see here we offer 5 templates specifically designed for Australia. And so folks, to recap, VectorVest offers a suite of robust testing tools to help you refine your trading plan with the express purpose of optimizing your performance and your confidence in your approach to the market. With that, we'll conclude the presentation. Thanks for attending.